The M&A market is absolutely turbocharged at the moment. A lot of what we're seeing around certainly the third quarter deals is a lot of pent-up energy we've had from the fundraising back in 19 and 20 that really didn't happen previously. So a lot of the dry powder that's been out there in the market is now being deployed into the market to invest. So as you said, the availability of cheap funding is also a key supporting factor for those deals. Well, I think there's three key things that we really see. The sorts of investments going on are really coming from corporates, they're coming from private equity, and SPACs is the third element. Touching on SPACs, first of all, clearly there is a availability of funds out there coming from those deals. And, that ability for companies here are progressing, certainly in Asia, looking to tap into those equity markets is a fast-paced way to get to market. In terms of corporates, certainly what we're seeing is really positive deal sentiment coming from CEOs and deal makers. And the reason for that is we're in a fairly low growth environment. And that sentiment means that CEOs are looking to other markets to potentially grow products, grow markets, and or capability. So that sort of deal sentiment is really driving CEOs in our latest KPMG survey, where 86% of CEOs think that inorganic growth is going to drive future development of their businesses in the next 3 years.
Do you think that the activity, the flurry of activity that we're seeing right now is also in anticipation of rates going up? So quickly do the M&A, do the acquisitions while money's sloshing around?
Yeah, look, I expect to see continued growth in deals. I mean, I hate to predict a number, but, I think we might hit the sort of nearly the $6 trillion mark. That would be obviously an exceptional year. And I said it's, in part based on, lots of cheap money, lots of pent-up energy where deals didn't get away last year. So, I think with interest rates staying low, the positive deal sentiment still there, and actually M&A is a real confidence game. So I think as that momentum still continues, I think we will see that flow into sort of first quarter of next year. If there are changes to, global economic markets or also interest rates at that point in time, I think we may see a certain tapering of the M&A market, but I think it remains to be seen at this point.